one question which frequently bothers traders is what is the effect of currency on gold. So you have gold prices which are changing in dollar terms because they are denominated in dollars. But a very important effect in India is because of the currency exchange rate, so which is how many rupees to the dollar. And when there is a movement in that, then sometimes it can overshadow the movement which has actually happened in dollar terms outside. In fact, that is frequently the case. This is also the reason why gold in India has always been a great investment. And that's why it's very important to know what is the exact effect of the exchange in currency exchange rates with the US dollar on the price of gold in India. So we'll take a quick example. And let us assume for a second that the price of gold in the US in dollar terms is $1,236 per troy ounce. As we are aware, 1 troy ounce is 31.103 grams. So I'm taking 1 troy ounce is 31.103 grams. And we're now going to do two parts, wherein one part is where the rupee to the dollar is 61.1. And let us assume on the other side that it moves by 1 rupee, which is quite a lot. So we get to see the difference properly. It becomes 62.1 rupees to the dollar, which in that sense the rupee has depreciated. Now, if you take this calculation on per 10 gram basis, just with this, not counting duty, this will convert on this side into 24280 rupees per 10 grams of gold. And if the rupee has become 62.1 to the dollar, then on this side you will get the gold price as 24677 per 10 grams in India without the exchange rate. So what I have basically done is taken the price in dollar terms, multiplied it by the exchange rate, divided it by 31.103 to make it per gram, and then multiplied it by 10 to get for 10 grams, because in India it is denominated per 10 grams and in the US it is done in international markets, in fact it is per troy ounce. So that's the difference which is there. Now in this, duty gets added, which is 10%. So I'm taking here 2428 gets added, and on this side about 2468 gets added. So this is the duty component which gets added, and if you add these two, this side you get a number 26708, and on even the rupee is 62.1 to the dollar, it becomes 27145. Now you will see the difference between these two is 734 rupees 437. So what that means is that when the dollar to the rupee, when the exchange rate changes by 1 rupee, which is 61.1 for example, becomes 62.1, other things remaining constant, then the change in gold price per 10 grams is rupees 437. Now every time when the exchange rate moves, and it moves every day, you will be able to get a fair idea of the effect on gold prices, assuming that gold prices in dollar terms are constant. I hope that helps you with your trading.